Investors in many parts of the world are shifting into traditional safe haven assets such as gold, as U.S. President Donald Trump's sweeping reciprocal tariffs announced recently has intensified fears of a global economic downturn.
Indonesia is no exception. Hundreds of Indonesians do not mind queuing for hours to buy gold bars at gold stores in the country's major cities, as they are seeking for safe haven asset to hedge against economic uncertainties. Many gold stores in the country's major cities have gotten run of stocks as the public's enthusiasm for gold has increased in the last few days. Many buyers have to go home with empty hands due to lack of stocks. The demand for gold continues to increase despite the surge in the price of the bullion. The price of gold produced by PT Aneka Tambang Tbk or Antam Gold increased by 32,000 rupiah to 1.97 million, about $125 per gram on Thursday, April the 17th. The price of Antam Gold has gained 10% this month. Meanwhile, global gold price extended their record on Wednesday, April the 16th, to breach $3,300 per ounce as a weaker dollar and escalating U.S.-China trade tensions pushed investors towards the safe haven asset. In the last 12 months, gold has gained 37% from $2,362 on April 15, 2024. The rush for gold has occurred following the steep fall in share prices and rupiah in the local financial markets amid worries over the impact of Trump's tariffs and the Indonesian economy. The punishing tariffs, which reach as high as 104% on Chinese goods and 32% on Indonesian goods, have shaken a global trading order that has persisted for decades and raised fears of recession in the global economy. Indonesian stocks and Indonesian rupiah fell sharply just after Trump's tariff announcement. Share prices in the local stock market in rupiah have begun to recover, but their outlook remains bleak. Although gold is considered best investment alternative, at least for now, fund managers have reminded investors to diversify their portfolio investment to lower risks. Don't put your eggs in one basket. Investing principle still holds. In addition to gold, there are a number of investment choices which offer stability in time of uncertainty. They include fixed income investments such as bonds and mutual funds. Bonds may be the most attractive fixed income investment option in time of uncertainty, as they offer stable incomes but generally offer higher than time deposits. At present, government bonds are quite popular. Government bonds are also safer compared to other financial instruments because they are guaranteed. Mutual fund is also a good investment alternative, especially for small investors and those who have less time and skill to count the risks of their investments. In Indonesia, there are 4 types of mutual funds available: money market mutual funds, fixed income mutual funds, mixed mutual funds, and stock equity funds. The 4 mutual funds types reflect different risk levels and potential returns, making them suitable for different investor profiles with different investment targets. But in principle, the high risk, high return concept also applies to mutual funds.
Well, investors worldwide are shifting their investment from the stock market amid the rising fears that the escalation of the trade war between the United States and China could further undermine the world's economy. So we have by Zoom today, Bapak Josua Pardede, the Chief Economist at Bank Permata. And now we will discuss what will be the best alternatives for investment during this time of uncertainty. Hello, Pak Joshua, how are you?
I'm good, thank you, Luisa.
Thank you for sparing your time for Economic Outlook today, Pa Joshua. Many investors are now shifting their investment to safe haven assets amid this recent sharp drop in share prices and also all the currencies in most parts of the world, including, of course, Indonesia. So in your opinion, what would be the best investment options in this time of uncertainty?
That's an excellent question. In times of heightened uncertainty like what we are experiencing today, with global equity volatility, geopolitical risk, and trade tension, investors tend to gravitate towards safer, more resilient assets. The best options often include gold, government bonds, high dividend blue chip stocks, and multi asset mutual funds. Gold and bonds serve as safe haven assets, while high dividend stocks and selected mutual funds also provides income and diversification. Investors also increasingly also turning to the hedge fund and also private equity to diversify returns and manage volatility. Most importantly, I think the right mix diversification depends on the risk appetite and investment horizon from the investor perspective.
Well, Pa Joshua, it seems that a lot of people, a lot of the Indonesian people are moving their assets now. And we have seen that there are so many people have flocked to gold stores recently in the past few weeks to buy gold bars for investment despite the sharp increase in the bullion prices. Why is gold considered a safe haven asset or perhaps the most safest choice at this moment and a better investment choice even in this time of uncertainty? Care to explain to us further?
Yeah, sure. Because we think that gold has long been viewed as safe haven asset due to its intrinsic value and independence from any single government's monetary policy. During crises such as economic, geopolitical, or monetary crisis, gold tends to hold or even appreciate in value. Right now, persistent inflation, currency depreciation risk, and also central bank buying, especially by country like China and India, are fueling demand. Gold also acts as as a hedge assets against both inflation and currency volatility, make it trusted store of value. In fact, recent research surveys showing that 58 of fund managers believe that gold would be the best performing assets in the event of full-blown trade war. So I think we are seeing that gold could be the best optimum assets in the amidst the trade war current issue.
Okay, I like how you put it as the most optimum asset to save at this point of time. Now, Pa Joshua, the gold price has begun to ease now after reaching record highs. How is the long-term outlook of the gold prices as the escalation of trade between China and the U.S. is still likely to continue to undermine the financial market?
So actually, if we look at the last Friday data, yes, gold price tended to slightly ease around 0.5% or $16 per troy ounce. But in general, if we look at the year-to-date performance, actually gold price still rose almost 27% or increased 700 to a dollar per troy ounce. And I think for the long-term outlook for the gold price still beyond 3,300 currently, I think gold price still ranging around 3,300 until 3,400. And I think looking at the current situation, as I mentioned earlier, that the U.S. interest rate tended to be, there's an expectation that U.S. will likely cut the interest rate in the second half following the expectation of the U.S. recession. And then, as I mentioned earlier, that the demand side from the gold from the Chinese central bank and also India central bank will likely increase the demand side. So we currently market is expecting that the gold price will be maintained at the high level, at least in the next 3 years, gold price is expected to be higher than 3,000 level, yes, per troy ounce per dollar. So I think the persistent global geopolitical tension between U.S. and China, coupled with the structural central bank buying and weakening U.S. dollar, create a supportive environment for U.S. For the gold. That said, if global economic recovery accelerates, I think, or the Fed delay the rate cut, we could see that some downside. But even then, gold is likely to remain a core portfolio hedge.
I see. Now, Pak Joshua, let's move on and talk about another type of investment. The prices of certain blue chip stocks have remained stable, and some even keep rising despite the rising market vitality. In your opinion, what stocks still offer good prospect despite this time of uncertainty?
So maybe I have to disclaim first, since I'm not the equity analyst, so I'm not gonna say about any kind of stocks, but I will discuss about the sectoral.
Right.
So talking about the stocks, even in the volatile markets, some equities still shine. Typically, those with the strong balance sheets, consistent dividends, and also exposure to the resilient sectors. So those includes like utility sectors, consumer staples, energy, banking, and also telecommunication stocks. And for Indonesia point of view, I think dividend-focused portfolios such as that's I already mentioned highlight the resilience, especially in utilities and staples. So on the global front, I think we're also seeing that opportunities among AI adopters, companies that integrate AI into their operations. These firms span across sectors, yeah, from manufacturing to the logistics, and are likely to benefit from productivity gains and cost saving. So I think the bottom line is that for the blue chips or the stocks with strong fundamentals, or I think with less dependent on the, for example, like U.S. market, that like we are experiencing the U.S. tariff, I think will be more resilient, or will be less dependent to the global situation right now. So I think those stocks or sectors should be taken into account by the investors.
Now, many investors are also turning to bonds as their options, especially government bonds, to hedge their investments against the loss. How good is a bond for personal investment?
So I believe that bonds is also a very viable option, particularly for conservative investors, risk-averse investors seeking capital preservation and predictable income. Yeah. With the central bank adopting a more dovish stance, we expect that bond yield to stabilize in the environment of high-quality government bonds, investment-grade corporate bonds, and emerging market sovereign over good yield with a manageable risk. For Indonesia perspective, for example, the high real interest rate have made SBN, or Indonesia government bond, increasingly attractive for retail investors. As we can see nowadays, that maybe looking at the last Friday data, Indonesia government bond yield, yeah, 10 years still down by 9 basis points last week, or the year-to-date performance still down by 5 basis points, or currently ranging at 6.95%. And I think this is if we compare with the Eurozone government bond or the Japanese government bond, I think Indonesia government bond is one of the bond yield that also decline, yeah, following the declining in the U.S. Treasury yield. So I still believe that yeah, bonds still also is seen by the investor as also another option other than gold assets.
Right. Now, a final question, Pak Joshua. During this time where it's very uncertain and we don't even know how long will this condition last. So we have the gold as an investment. We have blue stocks, blue chip stocks, we have bonds, as well as Raksadana. As a chief economist, from your perspective, what would be your strategy to diverse your investment and to make the wisest decision, and to, in fact, use this time as an opportunity to invest, to make the right decisions?
So as I mentioned earlier, that both gold bonds and gold are different purposes. Yeah, for example, bonds provide regular income, lower volatility, and ideal for capital preservation. And bonds are excellent in the deflationary or slow growth environmental. And also gold, on the other hand, doesn't yield income, but it's a strong inflation hedge and performs well during financial and geopolitical stress. And for the, I think, talking about the mutual fund, I think mutual fund offers a great way to diversify across asset classes, yeah, reduce idiosyncratic risk and access professional fund management, especially for Indonesia, for example, where many retail investors are new to the market. Mutual funds provide exposure to equities, bonds, and money market with a lower risk. So with proper selection, mutual funds can also deliver long-term capital growth and even through market cycles. So I think still believe we have to diversify. As the VT mentioned earlier, don't put your eggs in one
Eggs in one
basket.
basket,
So it means
yes.
that you have to diversify your portfolio investment in those assets, in gold, in fixed income or bonds, or in mutual funds. Wisely depends on your risk appetite.
All right. Okay. Bapak Josua Pardede, Chief Economist at Bank Permata, thank you so much for sharing your insights and advice here on Economic Outlook. Have a good day, and we'll have you back again next time on Economic Outlook. Thank you, Pak Joshua. Let's move on now to our...